Traders, welcome back to our price action trading lesson. We're looking at S&P 500 and many futures. We're going to use price action rules to help us identify high probability setups and where the market is going to go. Now, the main structure right now is somewhat of a trading range. We have one leg up, downtrend breaking new extreme, and a second leg working higher. This is where the market opened in this consolidation. Breaking new extreme, downtrend played out. Brand new uptrend has been established, but we right now exceeded the measured move, and you can see the trend line get confirmed, and the supportive 21 bar EMA keeps pointing up. Now, this uptrend is quite decent, and we expect new high because we're breaking this uptrend. But we were inside of a trend range earlier. Okay, this is not trending market. This is just one leg up, break, second leg up, and most breakouts out of trend ranges will fail. So this is the important high day key level, the resistance. This is the breakout area, and there's a big chance prices will eventually test this breakout area. Okay, so this is just something you keep in back of your mind. As of right now, you're going to withdraw short and downtrend because I need to respect the correction. Let's see how the EMA is going to hold. Okay, it is holding. It looks like we may get second entry long, but we broke below, and now I have to pay attention. Hold on, I cannot go long below EMA. Okay, and it looks like we may test this important higher day key level. If you're going to break above EMA, you have to decide if you're going to take high low or failed second entry short. And because if you go on a high time frame, which means 10,000 tick chart, it looks visually like a one leg working lower, and even you can make a case that this downtrend can be just slightly wider. And if there is a case for slightly wider downtrend, you want to see the failed second entry short. The ultimate trap, high low in this case, is just not enough because this is not trending market. We were a part of a trend range, and there's a big chance this is just one leg down, and we're gonna test the second leg down. So can we get the failed second entry short? We cannot. Market push lower. Now we have new low even for this slightly wider channel, and you can see we have the visual aspect of two legs. So now you already know that it's going to be important how this important key level is going to behave, because if we're going to ignore it and we're going to trade back into trend range, we're going to adapt to a brand new bearish trend down. And if buyers will step in the market here and we're going to break above EMA after two-legged pullback, that's a sign we're about to test the new high and the bulls are stronger. So let's see what's going to happen. Massive bullish pressure. This is what we want to see if you're thinking about buying. We're back above EMA, downtrend played out. Now we have high low again, but high low broke below EMA. It's getting a little bit congested. Now, because even the wider channel played out, you can consider, but it is slightly more aggressive because it broke below EMA, a little bit congested, you know, but you can make a case for taking it for a scalp. Work for a scalp. Can you get a failed second entry? Sure, we cannot. And now notice what happened. This is important because this made my job much harder now. Why? Because bias is unclear. At this point, I have to forget about this uptrend getting new high because we simply moved too far away from it. There's probably some tighter alternative, some small break, move to a new extreme. Now you know that since you are so far away from this and this bullish attempt failed to continue working higher, I'm forgetting about bullish setups right now, and I simply have to follow short-term trend line rule only. Because EMA flattened, my best bet is to follow tight channels and looking for new extremes. We have a break, move to a new extreme. We're breaking back above the EMA. Okay, so at this point the structure is getting more of a range-like feel because we are just consistently swinging up and down through the EMA. However, the key levels are not static. So my best bet how to navigate the structure is simply try to follow each individual short-term trend and just try to focus on short-term trend line because there is no big pattern. Okay, key levels are not static, and there is no big trend. I cannot draw a big trend like this, so I simply have no other choice but to follow short-term trend line rule. And this uptrend right now is quite strong on its own. So let's see what's gonna happen. We can get some long setup maybe. Okay, count reset. We're closing outside of this channel, which means we're about to test the new high because EMA is holding, and this is good if we're thinking about uptrend getting new high. This is new high, first entry long, pull back, second entry long, and we have also mini triple test. One bounce, second bounce, third bounce. So this is a second entry long combined with the triple test. The single bar is not that great, so that's a negative of the setup. A little bit more aggressive, but you have enough room to scalp before reaching these highs. So this is decent setup. Second entry long, triple test. You're at the EMA, small two-legged pullback, and uptrend is new high. And at this point, you have no other option but to follow short and tight channels. You have a break, move to a new extreme, uptrend played out. So at this point, what I have to do is pause looking to go long. We broke below EMA, and this downtrend is not getting a retest. We completely retraced it, so there is no bias. Can I take a second entry long, new high, first entry long, second entry long? I cannot. Okay, we are not pattern traders. One singular second entry long in the middle of nowhere will not have an edge on its own and will not give me nothing. Okay, these patterns are only good if we have key entry point confirmed and we understand what is the context and what is the bias. Okay, so remember, you're not just pattern traders. You're not looking for these patterns. You're looking to read the chart in front of you and use these patterns to confirm key entry points and the overall structure. So I cannot be looking to sell because we're above EMA. At the same time, I cannot be thinking about buying because there's no good setup. Uptrend played out, so I simply just have to be patient. Let price action develop a little bit more. Okay, we're going a little bit sideways, and this is important, okay, because your downtrend working lower breaking new extreme, and now we have somewhat of a small trend range because I can't deny the fact that we have resistance here because prices are bouncing at this level. EMA is completely flat, and we have price swings up, down, up, down, up, and down again. So we are definitely right now trading some small trend range, which means we can follow small trend range rules, which is pretty much buy low, sell high, to navigate the structure. And we have a new high, first entry long, second entry long. We have visual two-leg gap pullback, one leg down, break, second leg down, and now we have second entry long at the bottom of the trend range. In fact, at the main important key level, and this is decent high probability setup, great signal bar. You're buying at the bottom, broad two legs down. This is right now indicating small trend range structure, so you can apply small trend range rules, part of the big indecision. Now there is no break higher above this high low, so there is no higher low triggering. But had there been trigger, can you take it? Not really. It moves so far up. You're in the middle of the trend range, not that much room to scalp out. You know, no good setup here. Okay, now we have a break and a new extreme. So inside the trend range, we simply are going to follow short trend line. We are breaking new high, and in fact, this is new low, first entry short, pull back, second entry short. So we have a second entry short at the top of the trend range. Problem is, we have 9 bars stacked right next to each other. EMA flat in all these bars. Look at the tail at the bottom here. You know, it worked, but we can't really take it because it didn't form clean. Maybe had it form a little bit higher, away from this congestion. So we're selling at the top of this resistance. Yes, there's a break in new high, so you're thinking, okay, we may reverse. And also, this break is quite sideways and broad, which is what you like to see because you can trust selling at the top. The broader this break is, the lesser the chance there is wider channel. So this is why we want to see these broad two legs. But because it got a little bit congested, you know, the signal bar is also quite big. Not the cleanest setup, but if you're thinking about market pivoting lower, you have the right read. Now we have another second entry long. It feels a little bit squeezed, a little bit wedged, like the downtrend hasn't played out fully because we have 3 big bearish bars. But you are buying at the bottom, small downtrend play with the breaking extreme. If you took it, no big deal. Trading is about taking a chance because you need to have screen-based experience here to understand the nuance that this bearish momentum was a little bit stronger. It's a little bit squeezed together, so there may be stronger second leg down. But if you took it, no problem. You will have a losing trade here. Not a big deal. Trading is about taking a chance. And now market is breaking lower, so I have to adapt, and I have to right now adjust to slightly broader downtrend working lower because market has established a brand new pattern. So what I have to do, I have to copy the trend channel line. I'm gonna zoom out, and I can see the prices finally free themselves out of this consolidation, and we have brand new strong downtrend established on its own. Which means, not if we're breaking this downtrend, we expect new low to be tested according to trendline rule, okay? This downtrend is nice, steep, seamless, okay? So we definitely expect new low to be tested, and this is the structure that can be traded easily. Now, I can either draw uptrend like this for only 1 bar. There is very early breaking new high, so that's a little bit suspicious. But if I'm going to draw wider channel, notice the short-term trend line, this is simply way too broad, okay? This doesn't look that great. This is way too broad. So what I did, I drew trend line like this, but still I didn't take second entry short because you're not sure what exactly is the short-term trend line. Now the second entry short triggered below a horrible bar anyway, so you can't really justify it. But had there been better bar, I still would have preferred to wait for a lower high, which came now, lower high. Now this is technically still continuation of the second entry short because second entry short didn't get stopped, okay? but you can treat it sort of as a lower high because you can tell that there's a little pullback higher, first entry long, reverse down. So I'm gonna mark it, you know, second entry short, but I treat it as a mini lower high, and this is great hypervoltage setup. Why? Because price action rules align. Simply because this is clean downtrend working lower, EMA keeps pointing down, break of the trend line, two-legged pullback to the EMA keeps projecting, you need to get new extreme. This is exactly what you're looking for. And now you have a little breakout pullback, and this is the real lower high that you definitely can bet on as well, because EMA keeps rejecting even more. Bulls traded straight into EMA, key entry point held, and correction phase ended, and a brand new push phase is about to start. Quick scalp. I don't think we can take a felt second entry long now because massive bullish bar above EMA, and the single bar is horrible, so you can't really take it, but it did create the push to a new extreme. So what are you going to do right now? Well, you have to pause looking to sell at least temporarily, because you break, new extreme, and a brand new market cycle may begin. Consolidation or reversal. So let's just follow short-term channels, and is there going to be a first second entry reversal pattern? Okay, there is no reversal pattern, there's no reversal happening. In fact, we keep trending lower. So now I can be thinking about buying. Let's see what's gonna happen. I cannot really go short because you're breaking extreme. Okay, I cannot sell these bottoms, I cannot go long. Okay, we're going sideways, this is interesting. And now we have small consolidation, and you can see we have some of a bottoming pattern. What does it mean? It simply means that after breaking new extreme, you can see that each new push phase to new low is smaller and smaller, and in fact it's getting more static rather than resembling a trend down. Okay, you can see how these lows are getting static at this particular price level, and because this price level right now is getting strong, downtrend played out, and really the bearish momentum is dissipating. You have a new high for the central long, second entry long, you have a second entry long, multiple test. This is a little bit more advanced setup. You can't really take it if you're a beginner trader, but you can definitely make a case. Trading is about taking a chance. Taking this second entry long makes sense because the bearish depletion is apparent. There is key level, second entry long, great signal bar. Market may reverse. I'm going to redraw the short-term uptrend. At this point, I was thinking we may get reversal to the upside. Brand new uptrend may start, but notice what happened. Okay, why the channel was negated and we are trending lower. So at this point, this is where I had to zoom out a little bit and focus on the big structure, because we are going sideways for quite a while now. Okay, 2-3 hours we're going sideways, like EMA, and now even the wider channel played out with the break and the new extreme. So we have a break and the new high, and the key level is reacting. The resistance is coming to play. So you have flat EMA, consistent price swings up and down. Now I don't really want to sell just yet, simply because all downtrends played out, and what if there's going to be stronger bullish reversal? So I really think we need to get the push below EMA. Can we get push below EMA? Great. A lower high would be good confirmation setup, but there is no break higher. Okay, there is no first entry long here, matching high, so there is no lower high, and now we broke too far down. Okay, now it's too late for a lower high. So at this point, you know, you need to get a second entry short, and now you have second entry short, which is also a new high, first entry long, pullback, second entry long failure, second entry short, and a failed second entry long. It was a little bit too late for me to take it. I didn't like how he broke above the EMA, you know, but it is a second entry short and a failed second entry long. We're coming off the range highs. This downtrend should get the new extreme tested, you know, more aggressive setup, but you can consider second entry short, failed second entry long. Downtrend is new low. We're coming off the range highs. You need to ride it out a little bit. Your stop loss is one to give out a single bar, break in extreme. Market keeps trending lower. At this point, you need to adapt to widen the channel, but now it's getting way too late and you cannot be taking any setup. So this is the overall structure for today. It is very important to understand what is the big bias. Here it got really confusing, so the best bet is to try to navigate the short-term channels. Once we have this uptrend established, the uptrend is quite strong. Every single time we have quite a strong short-term channel, you're still applying the trendline rule. Then you had small trend range established, so you have to right now switch to trend range rules. Brand new downtrend, and now it's pretty much the same thing, following the trendline rule, and now trend range again. So the second part of the day was much more predictable. First part was a little bit harder because price action took its sweet time to develop, but eventually the structure was a little bit easier to navigate. So I hope you had a good trading day. I'm gonna wrap it up and I'm gonna talk to you next time. Good luck with your trading.